And we're back. Welcome back to the Retirement Decoded podcast. I'm your host, Scott Tucker. This is Associate Advisor Max Wren. Say hello, Max Wren.
Hello, Max Wren.
It's pretty cool. The AI cameras, they switch. I say something, you say something.
I'm all about the AI. So
when it works.
Yeah, right. When it works.
When it doesn't tell you all kinds of false information.
Yeah, sometimes it's just still a stupid chatbot. So
you should ask ChatGPT, is the earth flat? I wonder
my gosh.
I wonder what it'd say.
I've been having problems with ChatGPT, so I'm on the Google Gemini now.
Well, what's interesting about ChatGPT is you end up, you're like the teacher.
Yeah.
Like you should be getting a check.
It's training off your questions.
They charge you if you get to where you use it frequently, because I'll use it to do some research, but I have to double check the research and make sure the research is correct. Sometimes I have to correct it. It'll get numbers wrong about estate tax exclusions at the federal level or gift tax or that's different things.
Or it'll use the numbers from laws from previous years, or not the right year,
or it won't be up to snuff on what current law is. So what'll happen is, so if you use ChatGPT enough, you'll get kind of like throttled, or a little what would be a quota maybe. It'll cap out.
Yep.
And so it'll say, "Hey, Max, we'll remove they put you in like timeout unless you have $20."
Yeah.
And like if you have $20 a month, then you can just go whole hog on this deal. And so you pay the $20.
Yep.
And then you end up training ChatGPT how to do its job.
Yeah.
Like, wait a minute, does ChatGPT work for me, or do I work for ChatGPT? What's the company? OpenAI?
Yeah, OpenAI.
Yeah. So like
I'm
working for OpenAI. I'm paying OpenAI $20 a month to fix their service.
Yeah.
It's kind of weird.
They're still not profitable.
It's kind of like when you get your you get your internet, and then sometimes the router,
Mm-hmm.
so either you have a router of some sort, whether you have fiber or cable, coaxial, whichever way, you have that little router deal. Sometimes it freezes up, and now it's like you work for Comcast, and you're the troubleshooter.
Yep.
Like I work at home. We have AT&T fiber. We couldn't get it at the office, but we can get it at the house. I don't get it.
Yeah.
So anyway, bureaucracy or some sort, or whatever, or wherever the fiber happens to be, or I don't know, whatever it is. But yeah, then I'm like, it'll happen at home or it'll happen at the office once in a while. You got to unplug the little router thing and plug it back in.
Yep.
That's just like ChatGPT. Why am I working for ChatGPT? I'm not getting it. I'm paying them.
Send an invoice to them. See if they'll pay it.
Yeah, you think they would pay it, Max?
I think they may actually, if you just mail it to their billing department, if you figure out the address.
I don't want to get accused of any kind of like fraudulent billing scheme. Next thing I know, I'm in the hooscow.
Well, did you not to get off track, but
why not?
There was a giant news story a couple years ago about this gentleman who was doing that to Facebook, like Apple, Microsoft.
They're just paying the invoices?
And I think he made something absurd, like 10 to 20 million doing that before he got caught by the feds.
And here's another thing. So we're going to get to Dave's question here in a minute about what is he? Oh, about risk and investment risk in retirement. But so he took $10 or $20 million. Now you know how. Now, did he get caught? You may not know this. Did he get caught because they finally caught on, or did he get caught because he deposited $20 million into his Chase checking account?
Well, he did it over like a decade.
Well, it didn't. Did he deposit all this money into his Chase checking? We'll say Chase. Why not?
Yeah.
Deposit $20 million into your Chase checking and then not file tax returns on it?
Yeah. Maybe,
Because they do that where they, a friend of mine, when I was in the Navy, I was a cryptologist or code breaker. And one of my friends who was also a cryptologist, partly because we had these fancy clearances, and he kind of self-taught himself all this data computer stuff. So he actually now has a veteran-owned business that he's established where he's a contractor for the IRS, and they'll do like some data mining.
Oh, cool.
And they'll find, this is nothing top secret, guys. The IRS, go figure, they do data mining, and when they can't figure out how to do it well enough, they hire government contractors.
Oh, yeah.
So the IRS, this is strange, a lot of people don't know this, Northrop Grumman, that really... their claim to fame is making naval aircraft like fighter jets. Northrop Grumman is a contractor to the IRS for all the data stuff. So is IBM, and then so is my friend. He's like a veteran-owned business. He gets a piece of the business, not like they do, because of the scale of it. But he's established a business where they and he has some employees in that business. And because the IRS, the government doesn't do anything by itself real well. With contractors, they can do some pretty crazy things. And so they'll do data mining, and they'll try to find folks who don't report their income. So, Max, who would you think might not report their income besides the guy who sends invoices?
People like Pablo Escobar. Or, what's the big Chicago gangster guy?
Al Capone.
Yeah, Al Capone.
Al Capone went for...
That's how the FBI got him.
Yeah, Al Capone went for tax evasion
Yeah.
for unreported income. This is something funny we've talked about before on our radio show. We have a radio show on WIND every Sunday morning in Chicago. And we had a news story or a non-news story. I don't know. But it was a tax season story. So maybe we'll talk about it in a couple of months again as April comes around. But the Internal Revenue Code, it actually says, this is kind of funny. It says you have to report all of your income,
Yeah.
including your illegal income.
So they're if you're selling drugs and you're making money, they're cool with it as long as you're paying
No,
taxes.
they're not cool with it. The IRS might be cool with it. The DEA may not be so cool with it.
Right.
But the Internal Revenue Code says that you have to report your illegal income. It's like, okay, I'm going to report my illegal. Wait a minute. Is that a Schedule C? Should I incorporate write-offs, ammunition?
Yeah, we can't help you out with that if you're listening.
Airplane fuel. So it's kind of funny. So we were supposed to be talking about retirement planning though, Max. That's what the people want apparently. Maybe they don't. Maybe they'd rather weird stories about the Internal Revenue Code. So this comes from Dave. Dave says, Max, I'm about 5 years from retirement and still mostly invested for growth. Well, Max, let's stop right there. There's about two or three sentences to this question.
Yep.
So, Max, I'm about 5 years from retirement, and I'm still mostly invested for growth. What do you think about that from a risk perspective?
You already know where I'm going. So I have this quote. I sit down with every individual I sit down with, and everyone knows Warren Buffett, Mr. Buffett. But Warren has this saying, there's no sense risking what you have for what you don't need, right?
Yeah.
So if you're at the finish line already.
The way I try to memorize stuff, I know you do too, the way I have it memorized, and I could be incorrect, why I think Warren Buffett said, why would you risk everything you have for something you don't need?
Yeah.
That might be the way he says it, or I could be totally wrong. You could be the right one.
Yeah. Same thing.
One of us is right, or both of us are wrong.
Yeah.
But it's still the idea.
Yeah, you guys got the gist.
So all the time, Max, we have folks. Now we are in Chicago, near the suburb of Park Ridge.
Yep.
And we're near. If you don't live in Chicago, O'Hare International Airport is right next door. It's like a 7-minute Uber ride. The name of our office complex is actually O'Hare Plaza.
Yeah.
And we're on the first floor of the Valspar building or Ram McNally building. So 10-story building. One side of the building says Valspar, the paint company, and then the other side of the building says Ram McNally, the map company. Max, do you think, I don't know which floor that Ram McNally's on. Do you think they're up there making the maps?
Oh, maybe. Or maybe they outsource that to India or something.
Well, you think they have all the cartographers? And I don't know, is it on the 8th floor?
It's all the middle managers with
the middle managers,
degrees.
all the folks with the college degrees that can't fix my furnace in the winter.
Yep.
Yeah.
All those guys.
Were we talking about that? That was in the last episode. We didn't talk about that today, did we?
I can't remember.
We talk about that a fair amount, don't we?
Yeah.
Say, why do we all have college degrees and we can't fix our air conditioning?
Yeah, I can't find plumbers.
Yeah.
Can't get anyone to fix my HVAC.
The HVAC, the plumbing thing, you could have a little sanitary issue there. You could get wet. The pipes can be heavy. The electrician, you do have to be careful about the electrical circuits and the capacitors and resistors, whatever you got to do with that.
Yep.
But if you're going to go into the electrical thing, I think the better thing we talked about, I think it was our last podcast episode. Not that we don't have this topic recently at the office. Think, why are people borrowing us money to go to college and then they can't do anything with it? But if you're going to do the electrical, you'd be better off doing the HVAC because the emergency calls. You can clean up.
There you go.
Clean up. Anywho, so I'm about, Dave says, Max, I'm about 5 years from retirement and still mostly invested for growth. So, of course, the growth stocks, they do the boom and the bust, don't they?
Yeah, so hop on my soapbox here. There's kind of two big categories in the stock market. I try to dumb it down this way. So you have the growth stocks. Those are going to be all the hot names you see right now, like NVIDIA, AMD, Microsoft, companies like that. And then you have more value stocks, which are going to be kind of the brick and mortar blue chips of our society. So it's going to be like DuPont, chemical, McDonald's, Coca-Cola, companies like that. So,
Yeah. So Dave, when you're 5 years from retirement and you're invested mostly for growth, you're really invested mostly for risk.
yeah,
Right?
good way of putting it.
Yeah. So Dave, if you're like a lot of people and you talk to us or you come see us or whatnot, you go to tuckerretirement.com, by the way, get on our phone calendar at tuckerretirement.com, see our phone calendar, click and pick a time that works for you. And we'll spend 15 minutes for free with you over the telephone with one of our financial planners. Could be myself, Associate Advisor Max Wren, Associate Advisor Andre Hootie, who's not in the podcast studio today. And oftentimes what we do, Max, and just about all times what we do is we put two of us in each meeting so that we don't miss any blind spots of one another. So imagine if you went
for
to
the price of one.
Imagine if you went to the doctor and you had two doctors and then they had to figure out what they agreed on. 5 years from retirement, Dave, and you're still invested mostly for growth, which means mostly for risk. So Max just said what Warren Buffett's a big fan of, value stocks that pay dividends.
Yep.
Value stocks can fall in value. And value stocks can suspend their dividend or cut their dividend, but oftentimes you're going to find that they're going to be a lot more what you're after.
Yep. Now, a lot of people think it's just real easy. You can just pick value stocks, but these value stocks are also cyclical in nature, or they move in a cycle. Sometimes that sector is doing really well, depending on where you are in the market or business cycle. Other times it's doing really bad. So sometimes people don't have the right value stocks.
So do you think they're both cyclical and move in a cycle?
Yeah, that makes sense.
I got hung up on that at the beginning. So there are some stocks that are the consumer cyclicals that they do well when there's a boom time, and then when there's a recession, they crater.
Yep.
Then there's a consumer defensive where they just kind of go right along. Longtime listeners of the podcast will know that Associate Advisor Max Wren, you grew up in Centerville, Ohio.
Yeah, yep.
That's a suburb of Dayton, just a little bit south, correct?
Yeah, you got it.
And not far from Cincinnati.
Yeah, you're on top of it.
And what's a Cincinnati company that Max Wren won't shut up about?
Procter and Gamble.
Procter and Gamble, P&G.
Yep.
What are some examples of some P&G products?
Well, pretty much everything in your bathroom, guys. Your toothpaste, your toilet paper, your mouthwash, your fabric. Well, fabric softener is not in the bathroom.
The laundry room, though. The Tide Pods.
Tide Pods.
And the Bounce Sheets.
Don't eat those.
I think.
Yeah.
Is it Bounce Sheets? Or do they make those?
Dryer sheets.
Dryer Sheets. They make all that stuff.
Yep.
So those are like those consumer staples. So Procter & Gamble could be what they call a consumer defensive, where if you're concerned about a recession, if there's a recession, people still have to brush their teeth. Well, you don't have to, but you probably ought to. You brush your teeth, wash your clothes.
You need toilet paper.
Toilet paper. You're probably going to need toilet paper, recession or not. It's pretty much no getting around that.
Yeah.
So what you don't have to do. So I grew up in Lansing, Michigan, and that was where R.E. Olds, he founded Oldsmobile, and Oldsmobile was absorbed finally into General Motors. And so it's kind of a GM town, or it was before NAFTA, and then we sent all the jobs to Mexico. Another story for another time, or to Tennessee or wherever else. But which wasn't NAFTA, but there was unionized labor in Michigan that was pretty tough to deal with in their labor demands, and so jobs went south, like Tennessee. NAFTA jobs went to Mexico and such. And actually, with NAFTA too, a lot of the GM vehicles are made in Canada and Ontario for 25% less of what the cost to make them in Michigan. So that's all that. I don't know why I say all that. Anyway, so Lansing, Michigan, big GM town, used to have 5 pretty active plants, high salaries and things. That's not that way anymore. But General Motors is a stock that would be a consumer cyclical. When everything is going great, everybody wants to go buy a new car. When things are not going well, people don't want to buy a new car, and they don't even want to buy a used car.
Yeah.
They want to go to the auto parts store, buy a gizmo, and then go next door to Ace Hardware and buy a roll of duct tape, just trying to keep it going.
Yep.
Right? When times are tough or you're out of work, you're not buying a new car, you're patching together what you got.
Yep.
And so that would be a consumer cyclical boom bust thing. So and there's all the growth stocks, like these like NVIDIA type things. People are buying NVIDIA, they don't even know what they do.
They have no idea.
They're like, oh, so NVIDIA, they own ChatGPT, right? No.
Jim Cramer talked about it.
That's Max's voice that he uses for certain characters.
Yeah.
Certain characters.
When I'm annoyed.
Yeah. So people buy NVIDIA and they don't even know what it does. And some people say, well, they do that. They own ChatGPT. No, they don't. Well, then they make robots. Well, what does NVIDIA do? They make the chips for the AI companies.
Yeah.
And that's, okay, right? But Max, what do we always say? People love to buy high and they love to sell low.
That's their MO.
Right?
Yeah.
So now that NVIDIA stock when it's sky high, everybody wants to buy it. And when it crashes, because growth stocks do crash, Dave. And so we don't want you to be 5 years from retirement to have a big crash. You're invested for growth. Means you're really invested for risk. So he says, Dave says, Max, how do I start reducing risk without sacrificing income or locking everything up too early? What would you say to that second sentence there that Dave has?
I would say get on our phone calendar.
At TuckerRetirement.com?
Yep.
Oh, you're hardcore. You're putting up the paywall.
But
it's not even a paywall because it's a free phone call.
No, but I think, Dave, just to be straightforward with you, kind of this next step in life you're taking, it's something really big. And, at your age, normally you've kind of seen everything there is already, but retirement is one thing you haven't. So making sure you have a good plan in place, something that we call structure withdrawal. So when and where you're taking the money from, how you're doing it, it's really important. And it's usually something you kind of have one chance of setting up right. So it's really important that we make sure that we do it right.
So he says, how do I start reducing risk? Well, you need to start changing how you're invested. And something a lot of folks miss, Max, is in an IRA or a Roth or a 401k or a Roth 401k and these qualified retirement accounts, you can buy and sell and there's no capital gains.
Yep.
Right?
It's pretty nice.
So there's no reason to stay all bottled up in the stocks that are dangerous, that are the growth stocks. Now, the value stocks are not without danger either. When it comes to bonds do still have risk. That's a security that can gain or lose value. If we have where you can really get hurt in bonds are the longer duration bonds.
Yep.
Like you don't want to go out and buy, say if rates are wherever they are, and you buy a 30-year treasury from the federal government. Well, what if we get inflation and they raise rates 5%? Now your 30-year treasury, nobody wants it. So the market value of that treasury has fallen. So shorter duration, high credit quality bonds could be something to think about.
Yep. You got to be careful though still too. 2022 was the worst year ever in bond market history. So over 140 years of recorded market data that we have here for our U.S. bonds, and 2022 was the worst year ever in bond market history. If you had bonds, you lost 20% of your value of your account.
Even the safer in 2022, even the safer index of the bond, there's a bond aggregate index that only lost 10%. But that's, a lot of folks saw what Max had some clients. You were at a different firm at that time.
Yep.
And they had some folks that lost 20% in some bonds.
Yeah.
The Barclays aggregate bond index in 2022 was down 10%. You say, oh, it's only 10%. Well, if you got $1 million saved for retirement, and you lose $100,000 the month before you retire. How do you feel?
Yeah. And if you're depending on that income and your interest is tied to the asset value, you just took a 10% haircut on your income too. That's a lot.
Well, let's say you have $4 million saved for retirement. You lose 10%, $400,000. Now, yeah, I still have 3.6, but you are going to be really irritated about that $400,000 too.
Yeah.
So it's different that way. And then when you're invested for growth or invested for risk, like Dave says, 5 years from retirement. In 2022, we saw the S&P 500 index, that's the U.S. stock market, lose 19% of its value. Let's just round that, call it 20%. If you had $1 million invested in the U.S. stock market in 2022, you lost $200,000. If you had $5 million and you lost 20%, you lost $1 million.
Yeah.
And that, even if you say, well, I still have $4 million, but you're really irritated about the million, because we've gotten those calls from folks who are not our clients when that happens.
Yep.
They are not happy.
Most folks, they're in growth stocks. They're in the tech, which is more of a NASDAQ index. And what did the NASDAQ do in 2022? It was like 36% down.
Yeah, it was something crazy. I don't have it in front of me or memorize it. It was bad.
Yep.
There's the Magnificent Seven tech stocks too.
Yep.
So what a lot of folks are finding, even if they're in the U.S. stock market, now I forget the percentage exactly, but there's 7 stocks that are making up a large portion of the U.S. stock market, like your Amazon, Google, Meta, those. So if you have a whole giant chunk of your life savings in 7 companies that in their tech companies are high flyers. That could be really quite dangerous.
Yep.
So how do I start reducing risk without sacrificing income or locking everything up too early? I don't think that locking things up is what you ought to be thinking about doing. You need to have some liquidity going into retirement. We've heard some wild stories, Max, where we had a gentleman tell us that before he became a client, he went and shopped all our competitors.
This is wild.
It took a couple months to do this. He said everybody he talked to in the first meeting, they didn't even get the lay of the land very well. Everybody he talked to, now he and his wife saved $4.2 million for retirement and just investable assets, no real estate in that 4.2. They had 3 paid off houses too, but they saved their keister off. He was a real big earner for quite a while. And everybody he met with, he goes, yep, we've saved 4.2. And he said 9 out of 10 of them would say, well, you need to buy an annuity with an income rider.
Yeah.
They don't spend much. They have 3 paid off houses, and then they have 4.2 investable because they don't spend much, and they're not going to run out of money.
Yeah.
They don't need to go pay an insurance company for an income rider. So that was weird. I was surprised. I was actually surprised what he was telling me he was finding with these folks. He said he went somewhere else, and they said, oh, you've got $4.2 million investable, 3 paid off houses. You guys are like 67 and 64. You don't spend much. You guys need life insurance. And he's like, why do I need life insurance? They ought to help with your taxes. And he told me that. And they go, well, there are applications in tax planning where life insurance might be appropriate. It's sure as shinola not the first thing that anybody should be recommending.
No.
If you're talking to somebody and the first thing they say is you need an annuity for an income rider, that's not the right person. Or if you're talking to somebody and the first thing they're telling you is you need life insurance, that's not the right person. These folks are worth $6 million.
Yep.
There's really no longer a need for life insurance for any income purpose.
Right.
There's ways that you might implement it in a tax plan, but keywords tax plan, retirement plan, income plan, not a risk mitigation plan. This should be a plan that takes into account investments, taxes, medical, legacy, income plan for monthly income. You don't just go into the widget store, buy a widget, and solve these issues.
Yeah. If they're first thing out of their mouths or that first meeting, if they bring up investments, rate of return, if they bring up some kind of shiny object, try to wow you, you should run for the door. Run. Yeah. Don't walk. Run.
Max, we have inverted Bitcoin options we want to talk to you about
today. Yeah. So people listening, they can't see my eyes, but they're like saucers right now. So scary stuff.
Yeah, we're just teasing, not a recommendation to buy or sell any security, right? As they say. So Dave, hopefully that helped. You probably still have more questions, and we'd like to run your numbers, get your questions answered, and your answers questioned. We can start with a free 15-minute phone call at tuckerretirement.com. Get on our phone calendar. You, Dave, or any other Daves, or anybody ever knew a guy named Dave, just go to tuckerretirement.com. You see our phone calendar. You can do it on your smartphone here in a sec, or on your laptop, iPad, whatever, and just go to tuckerretirement.com, click and pick a time on your phone calendar, on our phone calendar, and we'll spend 15 minutes for free with you in the coming week over the telephone with one of our financial planners. It'd be myself, or Associate Advisor Max Wren, or Associate Advisor Andre Hootie, who's doing something else right now, not in the podcast studio. And from there, we could go to perhaps a Zoom thing where you could see our screen and show you what we're seeing. We'll chart out your whole financial future. And Dave, something we do, Dave, I'm leery to offer this, Max. Something we do for folks is we do a complimentary investment analysis and stress test. The last one we did, Max, took us a few hours, and
put a lot of time in it,
and maybe more than a few hours. It ended up with about a 44-page report.
Yeah,
and 44, I think it was. It's a Morningstar and Riskalyze reports on all this stuff, and so we showed these folks that if 2008 were to repeat, they would lose 37% of their investable assets, which would be, I think, a loss of $1.1 million.
Yeah, exactly.
And they had no idea. No idea.
Husband was managing everything, most of it.
Managing.
Yeah.
And he said, and we showed him one of the pages. We showed, look at of your stocks, you are 10% international, 90% US, and you really could use some more exposure to international markets because US is a little bit overvalued perhaps right now.
Yeah.
And he goes, no. One of those accounts there is managed. This one little account was managed by Fidelity or someplace.
Right.
But it was a little bitty account. So they couldn't do that much because he only let them do a little bit.
Yep.
And I go, no, Bob will say, look at if that managed account is to give you greater international exposure, why are 90% of your stocks U.S. companies? Okay. And so we didn't insult or criticize, but we had to get back to reality.
Yeah.
So let's take I have these glasses on. You can't see these unless you're on the YouTube version of the podcast at tuckeryoutube.com. But I have these glasses and I have to clean them every morning. Otherwise I can't see. And so he was trying to read with dirty glasses. He didn't know what he and his wife were doing. And so we don't want to be blindfolded, walk off the end of the pier and lose $1.1 million. And then do we have to go back to work? Those kind of thoughts. So get on our phone calendar at tuckerretirement.com and we'll spend 15 minutes for free over the telephone with you and get your questions answered and your answers questioned. Well, Max, it's been fun. It's been real. It's been real fun. We'll talk to you on the next podcast.